morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, July 9th. Quiet trade overnight. Prices are now starting to drift lower as the market's brace for more tariff news and Friday's USDA production and WASDE updates. Corn right now is 1 to 2 lower near session lows. Same with the beans, off 3 to 4 cents. Wheat prices steady to 3 lower, let's call it. Meal prices are now mixed, giving up some slight gains from earlier. Bean oil prices are backing off about 50 points. Late yesterday, President Trump took to social media, stating his administration expects to deliver more letters to more countries today, stating what their tariff rates for exports into the U.S. would rise to starting on August 1st if a trade deal is not done. This is on top of the dozen or so letters that were sent out to other countries earlier this week. Yesterday, President Trump also suggested he'd apply a 50% tariff on copper coming into the U.S. and 200% levies on pharmaceutical imports. Otherwise, fresh news is rather quiet. Later this morning, we'll get ethanol production from the EIA. Production last week is expected to have slipped to about 314 million gallons, down from 316 million the previous week. And if realized, that would be pretty much at just above the pace needed to hit the USDA corn usage estimate of 5.5 billion bushels. Estimates for Friday's USDA report are out. The Reuters poll shows the average trade guess is looking for slightly lower old crop stocks for corn, slightly higher for soybeans. We fall right into this camp. Our corn stocks figure at 1.34 billion. That is down 25 million bushels. We look for 50 million higher exports, partially offset by lower feed usage. Bean stocks, we're up 15 million bushels to 365. This based on a slightly lower residual figures. I do not expect any change in either the crush or export forecast on beans. On production, I don't see USDA changing corn or bean yields this month, keeping them at 181 on the corn, 52.5 on the beans. So as a result of that, look for just slightly lower production on both due to the lower acreage data from the June survey. My new crop corn ending stocks figure at 1.76 billion. That's up 10 million from last month and about 40 million above the average trade guesses. I look for a rather sizable 150 million bushel drop on the new crop exports as USDA resumes raising their production forecast for Brazil. My soybean ending stocks just over 300 million bushels, in line with the average trade guess. My wheat production 1.9 billion, down 17 million from June, on slightly below, and I'm slightly below the average trade guess there. I'll talk about the by class breakdowns tomorrow. My new crop ending stocks figure at 891 million bushels, slightly below the average guess. U.S. weather largely favorable, looking for record production or discounting record yield in production here, above the 181 on corn and likely above on soybeans as well. Record production here in the U.S. and Brazil will cap rallies for now. I expect these to dip under $4 before the end of July. Despite the speculative short position now in excess of 200,000 contracts. I think beans will hold weather premium a little bit longer until we know more about the late July and August weather and how trade discussions with Japan kind of pan out over the next 30 to 60 days. No beans trying to hold above last month's low, 10.13 and a quarter. I don't think it will be successful. I look for the spring low at 9.71 to be safe for now. Look for the USDA to start shifting bean oil back out of the exports into domestic usage for biofuel production. And I think wheat will continue to hold in a little bit better than corn with the U.S. Winter wheat harvest starting to wind down. Thanks for listening, everyone. Have a great day.